All right, the global money machine is breaking. Here's what that means for you and your plan.
Wondering why mortgages are so high and the market's so jumpy? Believe it or not, it starts in Tokyo.
For 30 years, Japan was basically the world's ATM, providing super cheap money to the global economy.
It's a strategy called the yen carry trade, and it fueled markets for decades with easy money. It was so simple, you'd borrow yen for almost nothing, buy US bonds for, say, 4%, and just pocket the difference.
And this wasn't small time. We're talking over $1 trillion flooding into stocks, real estate, everything.
Then, in 2024, the party stopped. Japan raised interest rates for the first time in 17 years.
Suddenly, borrowing yen isn't cheap anymore. The ATM is closed and that money is heading home.
Okay, so why does this hit your wallet? Well, Japan was one of the biggest buyers of US government debt.
And as Ray Dalio says, the bond market is the backbone. What happens there affects pretty much all other investments.
See, we all watch the Fed for short-term rates, but it's supply and demand that drives the long-term ones.
And that's the connection right there. It means higher mortgage rates, pressure on stocks, and more expensive credit.
So you can't control any of these global forces, but you can 100% control your own financial actions.
Because credit is getting tighter, you need your own financial fortress. Here's a 90-day plan to build it.
Okay, step 1 is simple, but powerful. For 1 week, just get brutally honest about where your money's going.
Week 2 is about cutting the fat. Look at things like subscriptions and takeout. Can you trim 10%?
And I mean, look at this. A $400 cut a month is almost $5,000 a year. That is huge.
Step 3, put it on autopilot. Set up automatic transfers to savings. Pay yourself first, always. Next up, week 4, attack that high-interest debt. It's an absolute wealth killer. Make a plan to crush it.
All right, week 6, let's start investing. Just open a simple account and automate it. Consistency is the key here.
And the power of this is just wow. Look, $500 a month could become nearly $750,000. That's life-changing.
So while these global shifts are huge, your personal plan is what really protects you. It's your defense.
So here's the final question. With global liquidity shrinking, is personal discipline the new financial superpower?